I'm taking a look at the Mastering Probability newsletter by Steve Rhodes. Steve Rhodes comes on every Monday to the Tom O'Brien Show. Love having him on. Has very nice and interesting analysis. Additionally, he is the host of the Trader's Edge Show right here, 11 a.m. Eastern Time on TFNN. Steve Rhodes, it is great to have you back. Steve, how was your weekend?
Be with you. Oh, weekend was just beautiful. You know, you're right. I mean, it is a little bit chilly in the morning.
Yeah.
But being a couple hundred miles south of you helps because of good old Lake Okeechobee. It tends to hold that cold weather back. But it was a bit chilly. But just gorgeous days for me. Some of the best gorgeous days for golfing. So I like it. And I haven't gotten out as much as I'd like to. But, I heard you talk about gold earlier.
Yes.
And so that's actually the place that I wanted to start today, if that's okay with you.
I would love to hear it, yes. I was kind of, anticipating maybe gold catching a bid with everything going on right now. But we're not seeing that. I'm curious to see what you're looking at regarding the metal.
Perfect. So let's take a look at the charts. And this is something we don't spend very much time with, but we did just finish the year, 2024. And so we're going to take a look at the yearly charts for gold. Now, this is a continuous contract that we're taking a look at. And the first thing that I want to note on this chart, first, the upper portion is the actual chart data. What's below is a way to measure consecutive moves higher or lower, consecutive higher closes or consecutive lower closes. The lower closes being in red, the dark figures, the black figures being higher closes out there. And that's important to take a look at. But the first thing that I would mention is if we take a look at this arrow, and I've been on the show with you enough, you're familiar with some of my lingo, for example, like a TD9 count pattern. And a TD9 count top or bottom, in this case here we're going to talk about a top. The high of that, and it's something that I teach to subscribers, so if people want to learn this, and they should want to learn that, they can subscribe to Mastering Probability, and I've got a workshop that will teach them, and it's easy to go ahead and understand the pattern. In this case here, in order for a high to form, Jacob, the high must take place on either bar 8, bar 9, or the bar following bar number 9. Now, David White, before he passed away, he and I were working on a project, and some of it dealt with the TD9 count system. And what he was able to identify, what we did, was if we get to a successful bar number 8, meaning that could be the high or low of the pattern, in this case here the high, there was a 90% probability that this would go on and complete the pattern. So in 2011, the bar following bar number 9, and that certainly worked out in this case here, but it was in 2011 when we got a TD9 count top. And then what we can see here is price move lower. If we go down to the bottom portion of the screen, we had 3 consecutive lower closes. In fact, gold actually moved higher for 11 consecutive years, higher closer for 11 consecutive years. Things tend to work in 2s to 4, between 2 and 4 out there. So no surprise that there was a 3-year pullback, or at least that it stopped after year 3. And then what transpired after that, we saw one 2-year rally, 1 year to the downside. Don't try to mark that out there. Another 2-year rally, 2 bars to the downside. And then 2024 was a 2-bar rally to the upside. So the question is, was 2024 a top inside of gold? The other thing is we can see that we've got bar number 8 that also completed in 2024. Remember, the high of the pattern can't take place on bars 8, bar 9, or the bar following bar number 9 out there. So we don't know the answer to that question, but it does suggest caution. So before I flip this chart, does this any questions that from what I've said in your mind that I can clarify?
No, that was very followable. I hear you. I'm with you the whole way on this.
Perfect. So now let's go take a look at a monthly time frame chart. And gold formed a monthly sell the D point top in November of 2024. Now I've got the A to B equals C to line, the A to B line. This is the blue line out here. It started with a TD9 count bottom back in July of 2016, it looks like. And then at the top with the TD9 count top, how about that? And so I've drawn in the A to B equals CD pattern out here. Once we get to the 1-to-1 price projection level, what we're looking for there is we're looking for confirmation that it's a top. And for me, the easiest way to confirm that is understand bullish or bearish, in this case here, bearish reversal candles, because that's what tells us the cavalry is ready to try to start moving lower. And that's what we had in November 2024. We had a nice bearish engulfing candle, and that since has led to some lower price. In fact, what we had was we had 2 months to the downside. So December was month number 2. So the question that I would pose here, knowing that things can work in twos. In fact, if we take a look at the very bottom portion of the chart out here, since November of 2022, all pullbacks before we had some type of rally were in bars of 2, and December was the second bar. So the next question, so on the yearly chart, we're saying question mark, is this a top? That's a much longer term picture, a bigger picture out there. It's something we just kind of keep in the back of our head, and we keep in the back of our head or someplace in our head out there because we're always wondering whether if support levels start to fall, then that starts becoming a little bit more magnified. Does that make sense?
Yes.
So right now, it's just on the shelf out there. But here we had a 2-month move to the downside. So the question would really be, are we getting ready for at least a 1-month rally inside of gold? Let's go take a look at the weekly time frame chart. The weekly time frame chart forms a TD9 count top. Everybody can see that out here. It was bar number 9. And really, since then, it's pretty much led to a sideways type move out here. This green line, which is referred to the oscillator and change line, has acted as a key level of resistance. So what's cool about this is if gold is going to rally, you and I know one thing. Price is going to have to close above that 27.35 level. Now that number, folks, what I just gave you, actually on my chart it says 27.3450. As price moves up and down, that number will move up and down. But you can use that as a guideline. We know, Jacob, that if price closes above that, then it's rally on, and we head back up to the high. So. Yep. You know, was December the 2-month pullback low out there? Well, this will answer our question for us. Just one simple number, which we'll call probably 27.36, 27.37, something like that. If price closes above that on a weekly time frame, then gold is at least going to go back after its TD9 count top. Any questions before I flip?
No, please continue.
Perfect. So now let's get to the daily time frame. And here in the daily time frame, by the way, today is going to become a TD9 count top. And that says that either the high for this pattern took place on Friday, or it could be tomorrow. We could see a rally tomorrow, and it takes out the high from today, takes out the high from Friday out there. That still would be a valid TD9 count top. But what we can also see out here, and this is really kind of interesting, we can see a wedge pattern, flag pattern. We can see a descending trend line. We can see a rising trend line. Turns out that's a 260-point move out there. Now, what typically unfolds here is when gold breaks either to the upside or to the downside of this wedge out there, we typically get a measured move equal to or greater than what would be 260 points. So it's really worthwhile for us to try to figure out what gold is communicating to us. At this stage here, knowing that we're going to get a confirmed TD9 count top today, we're likely going to see gold pull back to the 2665 level. Or what would be more logical is would pull back to that rising trend line. Make sense?
Yeah, understood.
So that's a daily time frame. Here is all 4 charts put together. So in summary, you know, we got a yearly TD9 top. Well, in summary, I'd say this: we will likely get a TD9 count topping pattern by 2026. Maybe it already came in. The monthly looks like it wants to pull back to its oscillator and change line. That's about 25.95. The weekly's got a TD9 count top with breakout support down at 25.27. That is always a possibility, but that won't come into play unless we see price break through this rising trend line out there. So I'd say more likely than not, gold is going to pull back to 2665 or that rising trend line. But here's the kicker, and we can come back to this kicker if you'd like. We come back to this break.
Absolutely. Steve, please stay right there, folks. We'll be right back with Steve Rhodes right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge Show on at 11 a.m. every day that the market is open right here on TFNN. One of the things I want to say before we continue on with Steve is if you have not checked out the Mastering Probability newsletter, now is a fantastic time, especially with all this kind of, you know, basically counter movement in the market. The market definitely gets substantially harder to trade when you enter into this kind of bearish territory. This is what our hosts are here for. If you have never tried out the Mastering Probability newsletter, I strongly recommend doing so, and you can do so risk-free. We have a 30-day money-back guarantee on all of our newsletters, so you can try that without having to fear losing out on any money for whatever reason it doesn't work for you. We, of course, are betting that it will work out. See, before we went to the break, we were looking at gold.
Yeah, and so we're taking a look at gold, and basically our summary was that we should expect or anticipate gold to move lower, maybe even get back towards the 2620 level. However, or but, and this is a big but out there.
Yeah.
All the charts that you and I were just looking at was charts for gold priced in U.S. dollars. Mm-hmm. But if you're sitting over in Europe, or if you're sitting in Europe, or maybe you're sitting in the U.K., maybe you're sitting in, which is part of Europe, maybe you're sitting in Japan, maybe you're sitting in, some other country, you're thinking in terms of your currencies. And interestingly enough, today, gold made new all-time highs. It made it in terms of euros. It made it in terms of Great British pounds. It made it in terms of Swiss krona. It made it in terms of Swedish francs. It made it in terms of Aussie dollars. Got real close in terms of Chinese yuan out there. Didn't totally get up there. That tells us that we've got buyers that are overseas, and what that should do. So, look, if we get sellers across the board out here, and this works this way for any instrument, then we start to see things moving to the south. But while we're still making new all-time highs today in other currencies out there, the moves lower inside of U.S. dollars, as long as that remains in effect, should be somewhat muted. Does that kind of make logical sense?
It does.
Perfect. So let's do this here. I like to say, let's never stop learning. I mean, I certainly live my day that way. So let's review some of the index charts. I will be a little bit quicker and thorough, but a bit quicker. So as long as price remains, I mentioned the oscillator and change line, and that's really important. This happens to be a monthly time frame chart for the Dow. If we take a look at November of 2023, we can see that price closed above that green oscillator and change line. To sum up, what is the oscillator and change line? It's the difference between the 19 period and 39 period exponential moving average of price out there. But here's what I really want you to know. As a green oscillator and change line tells us the price oscillator is above zero, and those are bullish conditions. When price is above that green line, it tells you that you have a rising price oscillator above zero, and those are real bullish conditions. And the question would be, anytime along the line from November of 2023, we've not had a close below that line. There's never been from a longer term perspective, we've got all kinds of traders here, right? We've got some traders that will use a 10-minute chart, but the majority of our listeners are listeners that are trying to manage their 401k accounts, or trying to understand their intermediate term, maybe swing trading, so you take a look at a daily time frame. Right. But in the bigger picture out here, one would never really want to sell their portfolio unless you saw a close below that line. Right now, as we speak, the Dow is testing that level. Does it matter what it's doing on today? What is today? The 15th, I think?
13th today.
I kind of lose track. It doesn't matter what it is today. It matters what it's going to be next Friday.
Yeah.
So come next Friday, folks, tune into the Trader's Edge show or watch the archive of that. I'm sure we'll be taking a look at that. But right now, price is testing support, and that's what's important for folks to know. Right now, that number is at about 42,284. Again, as price moves up and down, that number will change. So this is a real important thing to look at. If we take a look at the Dow, kind of like we did for gold, in a larger perspective, the Dow has rallied. If you look at the lower portion of my screen, for 2 consecutive years. Remember, things kind of tend to move in twos, anywhere between 2 to 4. Right. So it's the potential for a caution. It's a caution sign that's out there. The monthly chart formed a Rhodes Momentum Indicator top. That was in December of 2024. We were just talking about the monthly chart for the Dow. If we were to close below that green oscillator and change line come next Friday, then that's going to suggest that we should pull back further. Pull back further to where? Well, on Friday, on a weekly time frame, the Dow confirmed an A to B equals CD pattern, A, B, CD pattern to the downside. That gets us towards the 40,500 level. Now, that's just a price projection. As price gets down there, should it move down there, what we would be looking for is a bullish reversal candle to go ahead and confirm a bottom. Otherwise, its price target could be all the way down to 39,251, because price is always trying to seek resistance or support, and that would be a support level on the weekly time frame. The daily also has that A to B equals CD pattern, but it's also triggered a Rhodes Momentum Indicator signal. And if in fact it forms a bullish reversal candle, that would be a signal of a further rally. But that rally, and this is important to take a look at. We talked about the oscillator and change line, Jacob, on a weekly time frame for the Dow. Look at how it can also be used on the daily time frame. Look at how each of our rallies have found resistance at that oscillator and change line. So we do know if there's going to be a change in trend and the market's going to move to the upside, price needs to close above that line. At this moment in time, that reading is at 42,582. Here's the NASDAQ composite. The NASDAQ composite negated a TD9 count top last year, a yearly TD9 count top. Okay, so that would suggest that we might move higher. This too was 2 years to the upside, so it says caution. The weekly has a sell the D point top, but it's still traded above that green oscillator and change line. So before the NASDAQ composite can give us any kind of some type of sellish signal, price would have to close below what's currently printed out at 18,423. Again, that number will change. The weekly chart has a Rhodes Momentum Indicator top. That's suggesting lower price. If you're saying lower price to where, I would say it would be the daily breakout level. The cool thing about the TD9 count pattern, it provides us where price broke out from objectively as well as where price breaks down from. Here's the yearly NDX 100. What we don't have out here from a yearly standpoint is any kind of a topping signal. We're only in bar number 7 right now. The monthly chart has a Rhodes Momentum Indicator top. 2417 is going to be its key level of support. That's the monthly oscillator and change line out there. The daily suggesting that we may pull back to the 2436 level. And lastly, I'll leave folks with a potential trade out here. And that is this. We're taking a look at the charts for Apple. What I want to do is just focus on the very right-hand panel. And the very right panel shows us that we formed bar number 8 on Friday. Bar number 9 of a TD9 count is going to go ahead and form today. That says the bottom of this pattern either took place today already or should take place by the end of day tomorrow, with price rallying up towards its oscillator and change line, which is $247. That would be a nice move. That would be a good intraday trade out there. I don't think that bottom is in just yet. And the reason is these show some of the intraday charts out here, and it's only the 15-minute time frame that has given us a bottom signal. Typically, we would see bottom signals on more than just a 15-minute time frame from an intraday perspective if the bottom is going to come in. But we should start to see a bottom inside of Apple today, tomorrow, and at this stage here, I'd say it's more likely tomorrow.
Steve, thank you so much. We'll see you tomorrow morning, 11 a.m. for the Trader's Edge.
Sounds great. Thanks, Jacob, and have a great afternoon.
You too, Steve. Folks, stay right there. We'll be right back after.